now we've got all the Bitcoin. Bitcoin's quite resistant because we can audit it. But the fact is you could create another like dollar backed by Bitcoin, and you can keep this sort of fiat games going on for a long time. Eventually, Bitcoin and gold and a whole bunch of other assets, but it's sort of the same sort of fiat system. There's a centralized party involved. If you have Bitcoin being used by the people everywhere, it's highly resistant to being rugged by a central attack by a nation state or some other party.
In the quiet evolution of global finance, a new system is being built, one that doesn't rely on legacy banks or centralized control, but on open networks and verifiable trust. On-chain analyst Willy Woo described this transformation as the gradual construction of an entirely new financial infrastructure, with Bitcoin at its foundation. What began as a simple experiment in digital money has matured into a complex ecosystem where institutions and traditional banks are now exploring ways to build financial tools around it. Among these innovations is the ability for Bitcoin holders to use their assets as collateral, much like homeowners leveraging property to secure fiat loans. Yet, Wu cautioned that as Bitcoin integrates deeper into the financial system, it risks repeating the same mistakes that defined fiat money. By creating dollar-like instruments backed by Bitcoin, the market could inadvertently reintroduce centralized control and dilute the very decentralization that gives Bitcoin its strength. Such structures may endure for years, perpetuating the same systemic vulnerabilities Bitcoin was designed to overcome. Maintaining decentralization, therefore, remains essential as the asset matures into broader adoption. Ultimately, Wu stressed that Bitcoin's journey toward institutional and sovereign legitimacy will be measured in time, not technology. While gold's 6,000-year legacy commands historical trust, Bitcoin is still proving itself in real-world markets and macroeconomic cycles. For central banks and major investors, endurance and stability are what forge confidence. Wu believes that as Bitcoin continues to withstand crises and demonstrate resilience, it will earn its place beside gold, perhaps even as the next evolution of sound money. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I mean, I think it's just, it's not just one thing. It's just really, we're building effectively an industry, new rails for a new asset type. And so right now, just like in Bitcoin in the early days, it was the on-ramps, right? It was the exchanges. How do you actually buy the asset? That's a very simple thing. We tried experimenting with spending. I think it was a bit early. Now we're looking at what else can you do with this asset, So you might call it financialization, but that's got a bad sort of connotation. But really you can think of it as how do you make Bitcoin useful for people who hold it in all the ways it can express itself into the financial system. And so you're seeing the bridge of institutions coming in now, and people from TradFi that are coming in looking at this. Banks are coming in looking at this and what can we do with this? And on the Bitcoin side, it was like, I can use this coin now. I can like put it into a contract, escrow contract, hold my private key and borrow fiat against it. And so like, that's, I think that's one of the low hanging fruits right now is like being able to use your Bitcoin, just like you use your house for a mortgage to, get funding. So that's one of the core use cases. I think there's insurance products, there's all sorts of stuff. How is grandma going to hold her coins? How are we going to solve the problem for everyday people that it's a pretty technical undertaking to hold your coins across maybe it's a decade and not lose those keys. You might have to rotate those coins because there's an upgrade. Might be a quantum resistant upgrade coming soon. There's an ongoing thing, and it's beyond the capabilities of everyday, masses. Grandma won't be able to keep up. So how do you build those technologies and the effective infrastructure such that it's ready for prime time and everybody? And it'll take, it's probably a 10, 20-year journey to make this a full unleashed asset that people can use. I mean, you talked about Michael Saylor and the treasury companies. I mean, that's a different thing from, the consumer side. Consumer side Here they're running the experiment of paying with Bitcoin and Tether, and I think it's a bit early, but this stuff has to start, and I think it builds community and it gets the merchants understanding Bitcoin. I just think of it as a long journey, right? I was in a restaurant just yesterday and I paid with Lightning Bitcoin. I was a layer 2, using Blockstream's Liquid sidechain, where I've got Liquid Bitcoin. It swapped out through the bolts, went to through Lightning to the Naka terminal, and just as an example, apparently it didn't work. It was like it took minutes for it to work. I'm sitting there, and then long story short, the guy who's just around the corner comes out, tech support, walks into the restaurant. I'm there for an hour trying to resolve it. Turns out Amazon cloud services were having a hiccup, and it slowed everything down. And it was like I ended up paying with a credit card. So I think it'd be almost impossible to sustain that. I think it's you find these in these early emerging markets that the yields are really high and then they compress. So what we do, market neutral, getting yield on Bitcoin or US dollars. Presently, we can get 10%. Because the volatility and the inefficiencies in these digital asset markets are so, wide. But 2017, it was easy to get 100 to 150%. So you see how that's tapering down across the cycles. So, there's plenty of Bitcoins that's looking to fund liquidity if the yield is high and there's enough demand. So there's not enough demand at the moment because now we've got all the Bitcoin. Bitcoin's quite resistant because we can audit it, but the fact is you could create another dollar backed by Bitcoin, and you can keep this sort of fiat games going on for a long time. Eventually, Bitcoin and gold and a whole bunch of other assets, but it's sort of the same sort of fiat system. There's a centralized party involved. If you have Bitcoin being used by the people everywhere, it's highly resistant to being rugged by a central attack by a nation state or some other party. I think it's, big is part of it. I think more important is how old does it need to get? If I'm an institutional investor, if I'm a central bank, it is nation states that are stacking. It's mainly China. You're looking at, do I do Bitcoin or do I do gold? And gold's been around for 6,000 years and it's understood. And you got to get everyone over the line to understand Bitcoin. And even those that understand it debate it. And it's all the properties of Bitcoin haven't been expressed yet. We haven't even had one generation of time with it. So I sold.
You think that's happening?
I sold my real estate for Bitcoin. I was tired of the tenants, and I've talked to plenty of people who have sold and bought Bitcoin. So that's definitely happening because I've experienced myself, and I've met people that have done it themselves. So,
do you think that's reflected at all in the market prices? That's my point.
In the market, yeah, it has to, but we can't track exactly. When I see someone add capital to the network, where did it come from? Where did it come from? Did it come from real estate? It's going to be pretty tricky. Is real estate in a downturn, and that's why it's going down, and Bitcoin's growing as a network, and we don't know why. Everyone has their own reasons. So I know that it is demonetizing to some degree. How do you measure it? It's a different thing.
Willy Woo explained that Bitcoin's transparency allows for precise tracking of capital flows through metrics like realized cap, offering insights that traditional financial systems can't match. Even amid extreme volatility such as recent market turbulence exceeding $19 to $22 billion in liquidations, Bitcoin proved far more resilient than altcoins. Woo noted that this resilience reflects the network's maturity, underpinned by long-term holders who remain steadfast through short-term shocks. However, he cautioned that in broader macroeconomic crises, Bitcoin can still face temporary selling pressure as liquidity drains globally, like how gold reacts in the early stages of financial stress before recovering as investors seek stability outside the traditional system. Woo believes that Bitcoin's current weakness represents a standard bear market rather than a structural failure. Historically, deep drawdowns of up to 80% have been part of Bitcoin's cyclical rhythm, marking periods of consolidation before the next growth phase. He emphasized that these downturns are healthy resets within the asset's long-term trajectory, reflecting natural market dynamics rather than declining confidence. Once macro conditions stabilize and investor sentiment normalizes, Woo expects capital to flow back into assets that command enduring trust. For him, that remains Bitcoin an asset he continues to back with conviction, grounded in its transparent design, robust holder base, and long-term potential to outlast speculative market cycles. Let's get back to the interview.
And it's very easy to measure on the Bitcoin blockchain. You know, it's called realized cap. You can make an estimate of total capital in the market. All the trading stuff happens on exchanges. Doesn't really get moved to cold storage. Once you move to cold storage, you can make a fair guess that's a long-term investor, and so you can track that very to a high degree of accuracy. You know, and the interesting thing is most people get shaken out on the surface level, 10th of October, Trump tweets, you know, nasty things about tariffs to China, and all the capital markets crash. It was on a Friday. Some of it vented out risk off into crypto because it's 24/7. Nailed all the altcoins and shitcoins. Bitcoin held up, but it was pretty. But that was just liquidations. Yeah, more than FTX, more than ever. It was the number one. I've heard 19, 22, something like that, billion. Mainly in altcoins, not Bitcoin. It did sweep some of that, but mostly it was altcoins because the liquidity wasn't there. But that was all traders playing trader games. And it was not the hodlers in cold storage. You know, I messaged Max Kai, DeFi, so how many of your borrowers, you know, these guys that are borrowing fiat, you're fronting Bitcoin collateral, how many of them got into liquidation? None. It was just another day, you know, it didn't affect the long-term holding, you know, but we can be shaken out by fear of this sort of short-term stuff. I think that where we are in global macro, and you know, people talk about the everything bubble. I think if that turns and the everything bubble pops, and the last time was 2008, before that was 2001, the dot-com crash, then everything will be stress tested. And I'm not saying just Bitcoin and crypto, I mean world financial markets. Liquidity is going to pull out of the system, buy-sided liquidity. No one will want to buy. They want to run to safety. It's called a flight to safety. Everyone runs to the US dollar. And then gold afterwards. You can see gold starting to rip, right? That's telling you warning bells on the economy. Well, I just see Bitcoin as going into a normal standard bear market. Like everyone thinks it's strong, and it is. And the investors are strong, like institutional, MicroStrategy, these types of companies are holding it. So there's strength there. But if we get a pop in the global asset bubble, then that impact will pull it down, and that maybe we get a 80% drawdown like last time, and it's like just another 4-year cycle from the view of being inside Bitcoin. But from the view outside, it's a totally different thing. Look, it just did its normal thing against a stress test. Fiat, US dollar, Swiss franc. I know this is not a maxi answer, but the reality is, because when we talk about Bitcoin, you know, is the thing that's gonna win out of this. We're talking over a period of 10 years. Short-term volatility is what it is. Like, what was it? It was like was it a 2-3 month pullback in gold and the flight to safety? Everything unwinds. You got to wait for this whole thing. It's just like what happened a couple of weeks ago. Everything's dumping, and then it bounces back and mean reverts. The smoke's cleared. It's still clearing. It takes 1 month to structurally repair that. And so, like, in the short term, if you want to do timing games, you be in dollars. And you try to buy the bottom, like buying the bottom of the COVID dip, you know. But this will be slower, right? Because it's global macro. But nothing like the short term, the dollar, Swiss franc, you know, these currencies that are considered safe, right? And then after that, you know, buy whatever you want, you know, whatever you understand, whatever you've done your research on. For me, it's Bitcoin because I've done the research on that.
Amid global market turbulence and shifting liquidity conditions, Bitcoin continues to prove its resilience as a maturing asset class. Its transparency through on-chain metrics and the steadfast behavior of long-term holders reveal a deep foundation of conviction that remains intact despite volatility. While periods of sharp correction and liquidity-driven sell-offs are inevitable, they represent cyclical resets rather than systemic weakness. In contrast to speculative altcoins that falter under stress, Bitcoin increasingly behaves like a macro asset, one capable of withstanding shocks and recovering as capital seeks security beyond the traditional system. As the global economy grapples with uncertainty and the erosion of confidence in fiat structures, Bitcoin's decentralized nature and measurable integrity position it not merely as a hedge, but as a cornerstone of the evolving digital financial landscape. How might Bitcoin's growing role as a macro asset influence investor behavior and portfolio allocation strategies during future global liquidity crises? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support and we hope you enjoy the video.